Here with Clay Smolinski, Portfolio Manager at Platinum Asset Management. Thanks for joining us, Clay.
Well, welcome, Mark.
Let's talk about China. Hard or soft landing economically?
Certainly. I think when answering the question, when looking inside of China, evidence of a hard or soft landing is very much determined on what industry you're looking at the time. So we take the heavy industry, so we're talking about industries like steel or cement, where there's overcapacity. There is a clear hard landing going on. So there's been a big fall off in construction activity. The government is now planning forced closures of capacity in those industries. We're talking about 1.5 million steel workers being laid off over the next 12 months. Times are very tough there. However, you look at other sectors of the economy, and we're talking about sectors such as air travel, e-commerce, healthcare. There's no concept of landing there. These
takeoff mode.
These sectors are in takeoff mode, growing very strongly, creating a large amount of new employment. And that's really where we're focusing our attention, and that's really where our investments are today in China at Platinum. We're focusing on those consumer and service-focused industries. And then the question is, when we put those two together, what are we seeing on a broad basis? And what we see is, we look at the leading indicators, and what we see is that while growth has slowed, the economy certainly isn't in stall mode. So first, one leading indicator, a good one, is wage growth. So 2 years ago, wage growth across China was growing at 10% per annum. Today, that number is 5% per annum. A big step down, but 5% per annum is still fairly healthy in our book. Another interesting indicator is housing prices. So you can forget about the stock market. The real investment class of this nation is residential and commercial property. And house prices in China has actually been fairly strong over the last 18 months. And we're seeing very strong in tier 1 cities like Shanghai and Beijing, but it's also prices are rising in tier 2 and tier 3 cities. And then finally, we see the government. And the government is increasingly becoming more willing to take more and more measures to support growth. We see that through cuts to interest rates, but also there are a number of industries where a lot can still be done. China is not a developed country yet by any standards, so we think about the investment that can go into things like healthcare, the investment that can go into environmental solutions. They have a large environmental problem. So these are areas where we can see stimulus that, and it'll be stimulus that would be productive and good for society. So when we put all that together, it feels to us that the economy has stabilised, and we're very much in the soft landing camp for now.
That's great. Thanks for your update, Clay. Appreciate it.
You're welcome.